Good day everyone. Today we'll be looking at some of the best ETFs to buy and invest in. But first off, what is an ETF and why invest in it? An ETF, or exchange traded fund, is basically a basket of various securities that tries to track or mimic an underlying index. ETF can comprise of various investment types such as stocks, commodities, bonds, or even a mixture of these. One of the reasons why people invest in ETF is because it is a great way to diversify your portfolio, and because often they have low expense ratios, you would be able to own various stocks by paying fewer broker commissions as opposed to buying all those stocks individually. So now back to our question of what are some of the best ETFs to buy. In identifying these ETFs, I ran a scan of all of the ETFs listed in the United States of America. So initially, my scan comprised of 2,286 ETFs, and then the most important criteria for me was the total return of these ETFs over the periods of 3 years, 5 years, and 10 years per annum. So initially I started by looking at the 3-year total return per annum, and I wanted to make sure that they can result in at least 17% rate of return on an annual basis. This narrowed my list to only 175 ETFs. Then the next step was looking at those ETFs which managed to result in at least 17% total return per year on a 5-year period of time, over the course of 5 years. This resulted in only 70 ETFs, and last but not the least, by looking at those ETFs which have been consistently capable of producing at least 17% total return per annum on a 10-year basis, only 31 ETFs were identified. Here is a summary of the results. As you can see, the first one, TECL ETF, has had a fabulous 10-year total return of 45.98% per year, which is fantastic. But of course, we have to remember that these higher rewards come with higher risks, so there is always this correlation between risk and reward. So if you are a type of investor that cannot tolerate huge fluctuations in the total return, perhaps you might want to stay away from those 3 times or 2 times index funds, because they will generally have greater fluctuations. For the purpose of this video, I'll be focusing on QLD, which is the second one. For me, that's a type of ETF which has reasonable risk and reward, because it mimics the index and tries to maximize it by going 2 times the performance of the index, and it has generated 37.24% total return per year over the course of 10 years. Now, as you can see, this shows the tremendous performance of QLD or the ProShares Ultra QQQ ETF over 10 years. It has had a price performance of more than 1,949% increase over the 10 years. And basically, if you had invested in this ETF over the period of maybe, let's say, 5 years, you have been capable of generating fabulous outcomes. So to test the performance of this ETF, I ran a test by looking at the monthly price of this ETF over the past 5 years, and assuming that one were to invest $1,000 in this ETF every month with discipline. So my assumptions were, what if you were to purchase $1,000 worth of this ETF every month in the beginning of the month, and of course the purchase was assumed to be done in the beginning of the month, so the price for that would be the opening price for the month. and this was done over the past 5 years with discipline, without any interruptions. So the output of this is that after 5 years, of course, because you have been investing $1,000 every month, you would have $60,000 in total invested over the course of 5 years. That would be your own money. But this has also meant that throughout these 5 years, you gradually increase your total shares in this ETF. And at the end of 5 years, you would own 2,036 shares of QLD. Remember that some of this is the ones that you have directly purchased, and a number of those have been added or been given to you as a result of the stock split. So those 2,036 shares have each costed you an average of $29.46. During 5 years, you would have earned $362 in dividend. But the most impressive part would be in terms of the price growth. Your stocks would have 72% growth over the 5 years, and after 5 years you would have a profit of more than $43,030. And the reason I'm saying more than, because this is calculated based on the average price of QLD for the month of May. As we know, it can fluctuate, but I haven't been too optimistic. I have just used the average price as if you were to sell them. But regardless, you have made a great growth in terms of your price per share of this QLD over the course of 5 years. So here I'm listing a number of the other potentially good ETFs that you could keep in mind and perhaps invest in if you're specifically interested in investing in certain sectors, for example. So perhaps one of the best ETFs when it comes to semiconductors has been the ProShares Ultra Semiconductors. As you can see, USD that has had a 10-year return per year of 32%, and its 3-year return per year has been 52%, indicating an accelerated growth in the short term. If you're interested in healthcare, perhaps RXL would be a good ETF to keep in mind. For industrials, UXI, and you could also be looking at SSO if you're interested in overall S&P 500. Some of the other ones would be SSA, which focuses on small cap 600, and FDN, which mainly focuses on the Dow Jones Internet Index Fund. And of course, if you're very much interested in internet ETF, PNQI could be another good one for you to consider, because it has had a 10-year return per year of 22%, and its 3-year and 5-year return per year has also been very decent. Last but not least, UWM and FBT, especially FBT, which would be good for biotechnology. And finally, again, another option for semiconductors would be SMH, which has had 3-year return per year of 30% per year, and the 10-year return per annum has been 21%. These are all good options for you to consider. It doesn't mean that you need to start investing in one of them and forget about the rest. You could maybe, depending on your risk profile and risk preferences, choose a number of sectors that you're interested in, and then based on those, choose the best performing ETFs within that sector. And here are some of the examples that we have been looking at. So what are the ETFs that you invest in? Feel free to share your responses in the comment box below, and please don't forget to like this video and subscribe to the channel for more videos in the future. Thank you.